Coming up today, stocks continue to rip, Bitcoin goes into melt-up mode, Michael Saylor buys more, will a trade war bring a recession, Tesla continues to rip higher, gold falls, and what was once a crazy idea may just now be happening. It's got to be another big week, guys. Let's go. Welcome back, everybody. And oh man, doesn't the markets keep it interesting for us all? Even though S&P 500 finished pretty much flat today, Q's actually finished down slightly as once again the Trump trade taking over and pulling all those key assets higher once again. Russell 2000, small cap indice, now within 2 points of all-time highs. As the Trump trade continues to dominate, in fact, we've got Wharton professor, finance expert Jeremy Siegel calling Trump the most pro-stock market US president in history as we're getting more and more pronouncements coming through from him and the team he's putting together. Continuing to be well received by markets, and they're clearly excited by the prospect of new US leadership. But what absolutely stole the show today, digital gold, Bitcoin, currently sitting at $88,000 a coin as I speak, in an absolute melt up now. As you guys know, I've been saying for a few months, with a Trump win, I would be expecting to see it hit $100,000 a coin by Christmas. The way it's going, we may get there by the end of the week, if not the end of this month. As my trend strength indicator has only just gone back into blue, meaning momentum has taken over the Bitcoin market as traders all around the world look to front run the US government and what could be the first ever strategic reserve, US government buying Bitcoin. Stick with me because I'll give you a bit more details on that in a minute. But first, just to run you through all the hottest charts out there's the biggest Bitcoin ETF trust from BlackRock's iShares, IBIT, ripping up today as you would expect. However, their assets under management, and this data is delayed by 24 hours. However, as of Friday afternoon, it was already over 34 billion, which is now officially bigger than iShares' biggest gold ETF, IAU, 32.9 billion. Still not quite as big as the biggest gold ETF in the market, that's Spider's GLD, 75 billion. But the way we're going, Bitcoin may indeed be overtaking gold in terms of assets under management on Wall Street. And that's spilling over to the entire sector. We've got a lot of bullish breadth across the crypto space. Dogecoin surging higher today, 18%, along with the biggest crypto exchange in America, Coinbase, which could be a key partner with the US government. And the miners having a good day as well. Mara, 29% into their earnings tomorrow. Riot Platforms, 16%. Monster volumes coming in across the board here, and even waking up the small end of town. Bitcoin Depot, 54% today. This is a tiny little Bitcoin stock that operates the largest Bitcoin ATM network in the US, Canada, and Puerto Rico. You can use your cash to buy Bitcoin from over 8,000 plus Bitcoin ATMs. Interesting little business indeed. But not too far behind Coinbase in terms of market cap, MicroStrategy, Michael Saylor's company, which the legacy business is enterprise software. However, pretty much just a Bitcoin holding vehicle now. MicroStrategy actually owns over 1% of all outstanding Bitcoin. And just looking at the spread between MicroStrategy and Bitcoin, it's been trading up pretty much this whole year. Trades at a huge premium to their underlying holdings, actually. But I got to hand it to the guy. Admittedly, I have been a critic of him in the past. He does have quite a colourful and checkered history. And regardless of the underlying fundamentals, his trade does seem to be paying off. He's selling cheap debt, plowing all available funds into Bitcoin, and apparently just bought another $27,000 for $2 billion. So that's right, the biggest hodler out there is still buying at all-time highs. Current Bitcoin stash acquired for just under $12 billion, currently sitting on a profit to the tune of $11 billion. So like I said, I got to give it to him. That is one heck of a trade, assuming Bitcoin holds up, which very well looks like it's going to. Now we've got the most pro-Bitcoin US government we've ever seen. And so no doubt the expectations are high now. The market's going to need to see a lot of deregulation. He's promised to get rid of Gary Gensler, the digital asset hawk that heads up the SEC. Interesting to hear what Jay Powell thinks about all this. Can't imagine he's that favor of Bitcoin itself. But this isn't just about Bitcoin. This is about digital payments, blockchain technology, and potentially a way for America to differentiate itself from China, which has also been anti-crypto. But what I think would be a real watershed moment for the industry, key inflection point, and potentially what the market's already front-running, is if the US government officially adopts Bitcoin as part of its strategic reserve. In other words, it starts buying Bitcoin to hodl itself. And in fact, we've already got one Republican Senator, Cynthia Lummis, just confirmed a couple of days ago that Bitcoin will be becoming part of the federal strategic reserve. With her actually posting on X, "We are going to build a strategic Bitcoin reserve, looking at acquiring 1 million Bitcoin over 5 years. Not to mention all the Bitcoin they confiscate from criminals." And so just think about that for a second. Wouldn't that be interesting? The US government buying Bitcoin, finite digital asset that anyone can buy with a click of a button. They could help to actually corner the Bitcoin market, create the greatest pump in history that could actually benefit US taxpayers, because if they can buy a lot of Bitcoin, pump it up to who knows, million, $10 million a coin, anything's possible. They could then sell it and pay down some of the huge blown out US federal debt, which I'm sure would be much to the dismay of China and other large US Treasury holders. But it isn't just a pro-crypto US government. We're also 6 months in to the latest halving, in which the daily supply of Bitcoin being able to be mined gets cut in half. Looking back over the last 3 halving cycles, Bitcoin's typically rallied right after that, gone into a really big bull, especially after the last elections as well. Quite a lot of bullish seasonality here for Bitcoin, and now it appears momentum has taken over. I'd be very surprised if this didn't hit 100,000. Who knows, in the coming days, weeks, if not by Christmas, because there's now pretty much nothing to stop it, and there's just so much force behind this move now. It's also spilled over to Ethereum, which had been lagging for quite a few months. It's having a really strong rally ever since the election, and the total crypto market cap now at 2.88 trillion, a little bit off those all-time highs, of which it kissed 3 trillion right on the nose. November 2021 almost looks certain we're going to take that out now. And so just some basic technical analysis, we're breaking out to all-time highs. There's nothing more bullish than that. But just getting back to the stock market for a minute, we also heard Jeremy Siegel say today, Trump may dial back some proposed policies to avoid upsetting a roaring stock market. So just like his first term, he watches the stock market and undoubtedly wants to see it do well. And so we've got some hot momentum at the moment. Things are on a roll. He won't want to do anything to knock that over. Not even a stronger dollar or yields is affecting those key assets. But we could see tariffs on a much larger scale compared to his first term. That's still yet to be seen how that all plays out. And there's still plenty of doubt and skepticism out there. Capital economics. Trump won't be as positive for stocks as people think, but AI will keep the market soaring. Trump's tax deregulation and tariff proposals might disappoint the market. Well, that doesn't exactly seem to be the case over the last week. In fact, going into the election, I could see it in my own portfolios. It's like the market already knew. Key stocks were rallying up on that Tuesday, even before we started getting voting results. Like I said, the market already knew, and those rallies have continued. And just like we're seeing in Bitcoin, they're actually accelerating, along with a big bump up and outperformance of small caps versus large caps, which could still have a lot further to run. Some are outright pessimistic. BCA research, Trump's proposed trade war raises the chances of a US recession to 75%. Via Nax's tariff plans, they could lower household income and depress corporate investment. The firm advises pulling back from stocks as interest rates remain in restrictive territory. Well, the thing with tariffs is, yes, they could very well raise the prices of goods and services. However, the plan is to counteract that with lower taxes, which is actually designed to help those at the bottom as well. Because if taxes come materially down, consumers will have more money in their pocket, and a lot of the goods and services that have gone up in price are discretionary. Electronics, other manufactured things from China, homegrown electricity, homegrown food, other staples and necessities, they're not really exposed as much to those global tariffs, China tariffs, as it is for the discretionary spend. So it actually hurt more wealthy consumers who have a big discretionary spend. They'll be paying more for their goods and services. However, the idea is lower taxes puts more money in everybody's pockets. Whilst encouraging domestic production could actually help create some deflation in homegrown necessities and staple, energy, food, rent. And that's why we've got the likes of Goldman Sachs saying Trump's tax cuts could actually boost S&P 500's earnings by 20% over the next 2 years, which I wouldn't be surprised to see either. We've already got a huge amount of earnings per share momentum. Tax is one of the biggest middle line items for many companies out there, and you reduce their biggest expense, that could easily accelerate EPS on the upside, not to mention all the halo effects from lower tax rates as well. And it's interesting, way to the end of Q3 earnings season, we've had a pretty good result. 78% of S&P companies have beat on earnings, well above the historical average of 74%, and they're beating by an aggregate of 7.1%. Again, better than a historical 4.9%. Forward earnings expectations, all-time highs. Corporate buybacks, all-time highs. Like I've been saying for a while, this market's got everything going for it, and this soft landing at this point in time looks set to continue. Found an interesting summary on upcoming Trump administration's policy priorities. It's actually from a law firm's website. I'll put the link below this video for those of you who are interested in reading. I don't have any affiliation with this company. I just thought it gave a really good summary of what Trump and his team are likely to do across a number of key industries and areas. For example, drones were a priority under the first Trump admin and will likely continue to be under the second. They make mention of transport, rail, the environment, healthcare. They're going to really look to get down the cost of drugs. RFK is coming after pharmaceuticals, looking to make America healthy again. Wants to clean up the FDA as well and all the corruption. And then interchangeability between those that regulate the industry who also happen to sit on the boards of the biggest food and drug companies as well. Clear conflicts of interest. A lot more deregulation. Still yet to be seen what happens there with clean energy. Like I said, Musk is going to hold sway in that. Obviously, he's been given a strong mandate to restore the US southern border, which he's already making moves towards. His position on defense is peace through strength, so he will keep a strong military, just doesn't wish to send hundreds of billions of dollars to other countries. Seeking to mend relations with China, Russia, still could be a showdown with Iran. However, that's no real big threat to the markets. And has already announced wanting to wind down the Department of Education, leave it up to the states. So with the help of Musk, we could be seeing Javier Milei style cuts to the government agencies. They're going to gut them all from the inside. And like I said, there's a few key industries I'm watching and interested to see how it plays out. Could potentially be setting up for some contrarian play, clean energy being one of them. Clearly being sold off going into the election. Obviously, the short sellers have done really well. And whilst it's expected, he may roll back many of the Biden administration's climate programs, including subsidies for solar and wind projects, plus EV incentives. Like I said, I don't think he'll want to do anything too hard against Elon Musk and Tesla, as Musk is his biggest supporter and helped him to achieve a historic landslide win. So it may be the case he may roll back, but not completely dismantle Biden's clean energy spending. He just doesn't want to punish the fossil fuel industry. That's obviously got a tailwind, but he has also spoken in favor of nuclear, which is a clean energy. But for others like solar and wind, well, that's still yet to be seen, and the market's not so sure either. There's a look at the solar ETF, trading pretty weak here, oversold. Same with global clean energy companies as a whole, but still holding up really well. In addition to nuclear, lithium, key component for electric vehicle batteries, and some other clean energy ETFs like the popular PBW, actually holding up pretty good here. But what I consider the number one clean energy brand in the world. Watch, I'm a long-term shareholder in as well. As long as Elon Musk is involved in Tesla, I will never sell my shares. Just keep buying more on the dip like I did before earnings. Ripping up again today, 9%, massive volume, short squeeze, and it certainly helps Elon Musk that his new bestie is the 47th president of the United States of America. Quite a strong political tailwind there. And so apparently he donated about $130 million to Trump's campaign, gave him plenty of social support on the campaign trail and on social media. I think he may have also gave him some valuable data, strategic advice, as Elon does operate one of the largest AI GPU supercluster farms in the world. It was inside reports he had developed his own app to monitor the election and why he was the first to call it game, set, and match, hours before the media did. That big all-in bet, more so on his career and potential political backlash, seems to have already paid off massively. $68 billion richer, and I'm sure he's pleased to see the short sellers getting crushed once again. In fact, over the last couple of days, they've lost more than $5 billion. As believe it or not, Tesla is already approaching all-time highs. $414 a share back in November 21, and what a monster month it's been having, 40%. And that was the gap down there after they unveiled Robotaxi, Cybercab, a bit more of a look at the Optimus bots. Then we had the blowout earnings. Stock's up over 50% since then. And not doing all that great today, the largest AI stock, Nvidia, off 1.6%. Same with Apple. Mega cap tech taking a little bit of a back seat this last week. It's really been some of the smaller stocks. Other assets of the Trump trade stealing the spotlight, including Palantir, which is likely to keep developing a very close relationship with the US government, as their technology is being used in the military, can help monitor assets all around the world in real time, crunch immense amounts of data, provide fine-tuned analytics to make really smart decisions, which is now a critical part of many governments and companies' whole technology stack now. And we've still got a bunch of other smaller stocks ripping up here. Hims and Hers Health up 19% today. Another big winner for my Stock Picks members. Along with big rips in the space industry today. Another stock we've got, Intuitive Machines, ripping up today. Portfolio having another great day. And even some of the older space stocks like Virgin Galactic up 21% today. And another key space stock, Rocket Lab, powering higher here today. It's already been rallying for a few months. And a continued rip for eVTOL, electric vertical takeoff and landing stock. Archer Aviation up 15% today. Joby having a big day, and former high-flying growth stocks, Zoom Video up 5%. Americans feeling better. They may hit the road on a holiday. Winnebago up 6.5% today, breaking out. And you know the market's in a good place when the biggest custodian of shares, BlackRock, and what I call the BlackRock barometer, continuing to break out, along with the brokers as well. Interactive Brokers, strong day on big volume. Robinhood up 7.4%, again on big volume, and you know the market's feeling really good when former meme favorites like GameStop are having a good day as well. We are getting some big moves across the board, looking underneath the hood. Another key industry I'll be watching, looking to see how it plays out, could also potentially set up for contrarian play. Cannabis. Trump did recently come out in support of the Florida cannabis legalization ballot initiative. However, state's governor, Ron DeSantis, was against it, and ultimately it didn't pass. So the industry is sold off very hard as there's plenty of uncertainty, which the market always hates. However, with Musk in there, my theory is they're looking to clean up the government's books. They need to increase revenue. They need to decrease spending. Cannabis legalization is an easy political win since most Americans overwhelmingly favor legalization, so there should be very little political blowback. He could also position it as taking away business from the Mexican cartels, along with the medical benefits of doing so as well. However, the cannabis industry is still trading really heavy. MSOS down 17% today, for which I have not bought yet. I'm looking at a number of securities in this space. Technically speaking, we're trading so heavy here, we probably haven't made a at bottom yet, but I'm definitely watching this next week and may pick up a few shares in this space. But again, this is a long, bumpy road and quite the political football. But it's looking more and more likely like a clean red sweep. Republicans in the White House, the Senate, and the lower house of Congress as well. Just 4 more seats needed to get the 218 required, which is looking highly likely at this stage. Basically, it's going to make it a whole lot easier for Trump to enact his political agenda, and there shouldn't be as much gridlock in Washington. In other words, this government should be able to get stuff done. And this is why we're seeing Tesla rip up so hard. Like Dan Ives just said today, we estimate the AI autonomous opportunity is worth $1 trillion alone for Tesla, and we fully expect under Trump White House, these key initiatives will get fast-tracked as the federal regulatory spiderweb Tesla has encountered clears significantly under Trump. And I think that's what the market and a lot of people have been underestimating, maybe not so much now, is Tesla's AI capabilities and just the potential to dominate autonomous driving and how big a market that will be. Robo-taxis, not to mention Optimus Bot, battery storage, and let's not forget, they're still the biggest EV company in the world as well. But just moving on to global macro, we've got the US dollar still trading firm here. As the media is reporting it, as the market significantly pricing in much more inflation around the corner, and that the deficit and debt is going to blow out even further. However, I think it's more of a case of the market, and we can see this across many financial markets. When you corroborate the moves, is pricing in stronger US economic growth, which could indeed bring a little higher inflation. However, if there was really big inflation worries, we would see gold hold up. Instead, it's diving, which we can see clearly on the chart here. Pretty heavy volume. Big move for gold today, down almost 3%. Remember, gold's a really low volatility asset. Typically only moves 0.5% or so on any given day. So for gold to move down almost 3% on volume, that is significant. And what the market's telling me is it may have been a bit of a part of the Harris hedge, in which the narrative was blowing out US debt, geopolitical tensions continuing to rise, a really weak US dollar. That's what gold was appearing to react to and trade up, like I said, potentially as a hedge. However, that's all changed now. Money doesn't lie, and it's reversed course, which is telling me geopolitical risk premium may be coming out of the market, the strength of the US economy, the strength of the US dollar. However, it's not all that worried about inflation. Same deal on silver. Bit of a sharp pullback there over the last week, and even crude as well. So it's likely geopolitical risk premium is coming out of commodity markets as negotiations have already begun to end these wars. Not to mention the US dollar is trading on firm footing. Like I said, in my opinion, on the expectation the US economy is going to hold up better than what was just previously thought a month or two ago. And that's further confirmed by looking at the Fed Fund futures market, which are really changed their chances. We're going to get another Fed rate cut in December. Now over 1 in 3 chance they may actually stay on hold. And the US 10-year bond yield at 4.33. And in fact, just looking at the spread of the market's expectations of inflation, did gap up after the election. However, it's actually traded down the last couple of days, pretty much to where it was a couple of days before the election. And it's just clear the market is really warming up to US domestic companies, leveraged to the US economy. We can see that in the Russell 2000, ripping up here. It's clear as day. But no doubt things are getting a little frothy. We can see that with a small little close-end fund, private investments have actually got a stake in Elon Musk's SpaceX, not to mention other top privately held unicorns. ChatGPT owner OpenAI, Fortnite developer Epic Games, fintech Stripe has absolutely rocketed. That's the Destiny Tech 100 fund, which has 38% of its portfolio in private shares of SpaceX. However, the signs of Froth is its net asset value, which it marks to market the value of its investments. It puts at $5.15 a share. That's the NAV, currently trading at $42 per unit. That's a huge premium because it has a low float, 9.7 million outstanding shares. Such an exciting story. SpaceX, all those other unicorns. The market, most likely meme traders, retail traders, as this is too small for institutions, plus the premium over NAV is ridiculous. That for sure is a sign of froth. But the thing with froth is it can go on for a lot longer and a lot higher than what we think. And that's why we can also see it in other spots of the market as well, GameStop. So the market is feeling pretty good at the moment. Fear and greed index, 68, still not quite extreme greed, still could have further to go. And the S&P 500 hasn't quite gone into melt-up mode yet. And we're really in a seasonally bullish period the last 6 weeks of the year, going into January as well, when we've already got momentum. Political uncertainties have been removed, but like I said, it's been a rotation into the smaller end of town and those assets with political tailwinds. Over the economic calendar, quiet start to the week as usual. A few Fed speakers tomorrow. The one we'll be really looking at, inflation data Wednesday. Core inflation rate expected to come in 3.3% year over year, and this will be a key theme we'll be paying attention to over the coming months. So what sort of economic data we're going to get Fed, whether we get any little surprises there. Looking out Thursday, GDP data from the Eurozone, a bit more inflation data from the States, PPIs, and finishing out Friday with a look at retail sales year over year, expected to come in 1.9%. And just looking at my sector breadth table indicator, top 3 sectors, financials, industrials, and consumer discretionary, with a bit of weakness in the defensive sectors, utilities, health, and staples actually being the weakest sector. And we can see that sharp distinction ever since the election in sector performance. Staples are actually down, along with REITs, and a much performing better group, growth, high beta, cyclical, actually discretionary stocks performing even better than small caps since the election. But obviously, what's been on fire is Bitcoin. Reaching for the stars as the market front runs the US government and their potential announcement of a strategic reserve. Looks to be well on its way to $100,000 a coin. That's all for the daily market review. To kick off what's sure to be another exciting week across financial markets. Thanks very much for sticking with Click Capital, and I'll see you back again here this time tomorrow. Cheers.